All right, guys, we're making an emergency video. Make sure to hit that like and subscribe. We're here at 10:02 p.m. on March 6, 2026, a Friday. The market has been brutal, okay? Not sure what your setup is, but personally speaking, you don't like what you're seeing in the market, right? Things are kind of bloody. However, this is a time to buy. I know it's hard to buy at this time because you feel like the next day, well, it's going to go down even more. So let me correct that. It's time to DCA. Okay, if we look at this chart right here, the market is in extreme fear. Many have said that during times of fear is an opportunity as well. Now, I'm not trying to say that we need to capitalize on any sort of violence or war. That's not what I'm saying. But the world is happening, whether we can, what we can control and what we can't, it's going to happen. So my point, first of all, is get defensive right now. I do not think that this market uh, downward movement is over. I still think maybe there's, personally speaking, another month or a month and a half. So just be ready, okay? Just have your plan. You may want to get more defensive around this time. Markets are down 453 on the Dow, 90 on the S&P, and 361 on the Nasdaq. That is pretty significant considering where we've gone so far, how we're continuing to move down. But I really think, guys, around maybe May, and this is just my personal opinion, not a financial advisor, I really do think around May or June, this market's going to have a turnaround that may not look back. But that's still some time to experience some pain, but also some time for opportunity. So I really want to emphasize this point, right? Because I think the biggest stirring of the pot comes from the war in Iran, right? So how do markets usually react during wars, whether it's the beginning, middle, or end, right? So initially there is shock and volatility. I think we've felt that more than ever. There's been good days this week where it's like, wow, this market's back. And then the next day and then the next couple of days, it's like, okay, this is a bear market, right? We are not in a good place. And I think the war has a lot to do with that, right? War, quote unquote, right? So the immediate reaction is usually negative with high volatility. That's exactly what I feel the market has been having. Major conflicts often lead to short-term declines, but the market usually recovers within 28 days on average. I need you guys to know the facts, the statistics, right? This is obviously artificial intelligence providing the information, but it's sweeping through a lot of data that the market has given over its existence. So a buy the dip opportunity. Now, I'm not saying you go out and buy penny stocks. That's not what I'm saying, but stocks that are down, right? I know the market is near all-time highs, but there are still stocks down 20, 30, 40%. Not cheap, but with fractional shares being pretty much a norm nowadays, there's opportunities, right, to even make $10 turn into something bigger. Now, that's obviously not going to change your life, but it's a start for any investor. So historically, the onset of war has often served as a buying opportunity rather than a signal to exit, with stocks delivering positive returns 1 year after the initial conflict. So this conflict has just started, February 28th, if I'm not mistaken. So brace yourselves, guys. Like I said, there's still some time for this market to experience more pain. I truly think at this point, maybe in the next month or two, bears are going to be in full bloodbath mode. They're going to act like they own the market. They're going to act like there's no hope for the market. But we know if you look at that all-time chart, there is hope, right? So sector performance, right? You want to get defensive. You want to go energy and aerospace, right? These types of companies that are directly correlated with, unfortunately, what's occurring in the Middle East. Again, nothing of this is saying, well, yes, we want to advocate for this or advocate for that. It's just your money, right, in the market. That's a completely different topic than what's happening geopolitically. We have no control over that. So obviously, investors are going to often move their capital into safe haven assets. Now, I've been big on O Realty Income Company. That's actually been kind of bleeding as well. SCHD has been pretty steady. VOO has been bleeding. So yes, we're getting defensive. Safe haven, right, such as gold. So you may see gold go up quite a bit with the risk, right? But that's going to have its time too, right? Don't get me wrong. Gold is a solid investment as well, but it's going to have its period of surging and then withdrawing Bitcoin will have its, it's really in its point of a winter, right? And it's going to surge again. But nobody can time the market. So, long story short, if you're going to tune into the end of this video, now is the time to DCA. It's never a bad time to DCA, in my opinion. You want to look at VOO. If you're long term, if you're more short term looking for income, you want to go with SCHD, something like that. And if you're just looking for some consistent stocks, in my opinion, that could be heavily AI infrastructure oriented, you want to look at Iron, right? So that's just my opinion, guys. Let me know what you guys think. Quick video on this Friday night. Have a great weekend, and we'll talk to you guys later.